Hey everybody, Paul Carson here with Philadelphia Mortgage Brokers. So I've been given the opportunity by my friends at AIME to jump in and do a broker playbook here. So figuring out what that is as we go along. And I've been told I get to talk about knowing your numbers. And really, I think that's one of the, if not the most critical part of our job, top three easily. I'm very passionate about knowing my numbers, and I use how geeky I am about numbers to really set myself apart from the competition. So I look at it this way. Most average loan officers aren't necessarily great at all the details of the numbers of a purchase estimate or a refinance estimate, all the intricacies that go into those. So I actually I use that as an advantage. I want to make sure we take time up front, whether it's a lead or prospect or a client or anybody or a repeat client, knowing the numbers up front in a very tight range. It just sets the stage for a great transaction start to finish. So whether or not that's just someone looking to rate and term refinance, take an existing balance, rolling closing costs, things like that, we're looking to see what are we saving, exactly how much that is. I want to break down P&I versus P&I, potentially any PMI savings. Maybe if there's a debt restructure and a cash out, we're looking at, hey, we're eliminating these payments, rolling things in. So helping manage people's cash flows and really getting involved and invested in the numbers, it's been really helpful for my business. And number one, it's like, we are debt advisors. It is our position to help give better advice than anybody else. Our competition out there, the average loan officer that could work at a big box lender at a call center, or just your average retail LO who's closing 2-3 loans a month tops. So these folks just don't have the experience of getting in the weeds necessarily and knowing all the local market as best they can. So how can a call center in Michigan know my local market here in Philadelphia better than me? They can't. So I'm going to use that to my advantage. I know my taxes better. I know my insurance better, things like that. So kind of a long start to what I was thinking, but yeah, really one of my main ways I set myself apart is that differentiation of being a geek for the numbers. I found like a lot of times some loan officers won't take the time to learn the why behind what we're doing. What is a homeowners association? What is a condominium? What exactly are people signing themselves up for when they're doing that? So from that perspective, being a geek for numbers, I have been on my condo HOA board for 10 plus years as president. Hopefully somebody will take that role off my plate, but I know how the mechanics of a condo work from the financial perspective. That's a small condo. And then I'm also the treasurer of my HOA board in the suburbs. So again, being a nerd for the numbers and everything we do has been beneficial for me because I can speak to how all these things work behind the scenes. So really back to where the numbers are and how to differentiate ourselves as the local market experts is just asking better questions, peeking under the hood and knowing that one county's taxes and even one municipality's taxes vary greatly from one street to the next. So next up on the question point. So what's important for brokers to understand how much a client can afford when it comes to buying a house? How does this benefit the client in the long run? Great question. And a lot of times, especially if it's a first-time buyer, they'll come to us, ourselves, our team, and want to know what's the max I can get approved for. And I almost always walk them back and say, listen, it's not about seeing the max you can get approved for. I want to know, what is your budget? What are you paying in rent now? I want to know how you've gotten to where you are and what you're going to be comfortable with on a mortgage payment, because we don't make the client's mortgage payment. It's our job to help them get their loans approved, but I don't need to be comfortable with their mortgage payment. They do. And if they're paying $1,000 a month in rent and all of a sudden their mortgage payment's going to go to $2,000 a month, there's a chance they might have payment shock. Everybody's scenario is different, but getting particular about the numbers up front, helping a client establish their budget, their price point, making sure they're looking in the right neighborhoods to not exceed that budget. That's one of the biggest, if not the most important pieces, especially on the first-time buyer front. On the same token too, somebody who's a move-up buyer, a more seasoned homeowner who's already been paying a mortgage and taxes and is kind of used to that homeowner lifestyle, they're more likely to stretch their budget on that move-up house versus someone who's a first-time buyer who might just be kind of scraping it together a little bit tighter on funds. So at the end of the day, we want to make sure we can get them in a comfortable range and that matches the price point they're looking at, because whether or not your price point's $100,000 or it's 750 and above, anybody's going to fall in love with houses above their price point, regardless of what your price point is. So the better we can help folks dial in the numbers, we can help rein them in as far as like, hey, this is the max I can afford right now. Will it work within the confines of what we're doing? So what steps are you taking to help your clients determine their budget? How can you help them personalize their budget? Kind of speaking on the same lens of most people, when they find us or lead us, they either they've started to look at a particular price point, or they have, but maybe the numbers aren't aligned with they think they can afford, or they want to see how much they can get approved for. So I'm a big fan and a big proponent of really dialing in that budget and seeing where they want to land. So one of the things I do, if they a lot of times people have a specific house in mind, we can use as an example to start to look at an estimate. And if that's the case, I'll ask for that address, look it up, grab the taxes, the price point, put that together, and then put that estimate in front of the clients and say, hey, here's 123 Main Street. Here's the price point, full price, based on your down payment, X, Y, and Z. Here's the numbers. How does the monthly payment look? How does the cash to close look? I stopped talking. I let them tell me, it looks good, it looks bad, we need to move it up or down. But more oftentimes than not, they're close to where they think they're going to land, but we might need to fine tune that final price point of where they're looking, because one county and township taxes could vary by thousands. Big difference. Obviously, transfer tax varies between the suburbs and the city, inside of the city, and then New Jersey's exempt under $1 million. So there's all these different local intricacies that somebody could see a house this street, and across the street is a completely different financial situation. So we want to make sure we're integrally involved throughout the process to make sure, especially if they have a tighter budget and possibly a higher debt ratio. We don't want them to fall in love with a house they can't get approved for and or are not comfortable with. So what are the most important factors when helping clients determine their budget? Does location play a role in determining the city and rural area? Big time. So taxes, let's start with the city of Philadelphia proper has higher one-time transfer tax, 2.139% currently in 2021, versus most of the suburban townships and municipalities are 1% transfer tax. Some are slightly higher, 1.25%. For the most part, property taxes are lower within city limits at a similar price point, versus the suburbs have higher taxes at that similar price point, but the suburbs also have a lower transfer tax. So there's no free lunch sometimes. A lot of people are familiar with the tax abatement in the city of Philadelphia. So properties that are new construction or significantly rehabbed that have been approved for tax abatement, essentially taxes either remain stagnant for 10 years and not get reassessed on improvements. Similar thing with a new construction. So oftentimes a higher price point in new construction or rehab in the city will have significantly lower taxes. All of a sudden, you have someone looking over the bridge in South Jersey, and a $200,000-$300,000 home could have $6,000, $8,000, $9,000, $10,000 in property taxes instantly. So $300K in South Philly with maybe $2,000 in property taxes, $3,000 looks significantly different across the bridge in New Jersey, 2 or 3 times as much possibly. So yeah, location's a massive factor in determining budget, taxes, and everything else that relates to it as well. So we want to help. If the client's all over the place, I'm looking at PA, Jersey, and Delaware, that's great. We want to help you land there, but know that if you're going to look in different states and counties, it is going to have an impact on you. So we want to get ahead of that as best we can. Let's see. Why is it important for brokers to determine with clients what they're comfortable paying versus what they will qualify for? What factors contribute to this? Bad credit score, unsustainable income. Yeah, it's a great question. So I really, as I'm asking the same questions to most folks and having very similar conversations these days, it amazes me how many, it seems like most loan officers don't take the time to just ask a general budget questions. It's not like we're trying to insert ourselves as financial planners in folks' lives. Oftentimes we find ourselves in that position without asking. But at the same time too, we know all the we get to have a snapshot into the financial world of these clients and these households. So that's taking the time to show you care enough to say, hey, are you good and comfortable here? Because I don't want you to make a mistake. the way you properly convey that to a client has always been well received. And if they say, you know what, my budget was 2,000, but because of this, maybe we're paying off a car in 10 months. That payment goes away. I want to stretch it to 2,500. We're okay to make this stretch. Those are decisions households should make, not necessarily a loan officer and or a real estate agent saying you have to like pushing them down that road of affording a certain price point. I would much rather say, hey, this budget's a little too high, let's ratchet it back or take another look at it or whatever. So by the time you've gone under contract on a house that's slightly outside of where you're comfortable and or you're working with a loan officer who maybe doesn't have the numbers right and all of a sudden they change during the process and things are different than when you started, or numbers change and all of a sudden you had an approval and now that's not the case. Getting granular on the numbers, the location, about all the mechanics of how your mortgage is going to work, whether you're purchasing or even refinancing too. Many of the same things go on either side of the coin. So getting into the details and really just double checking with people, like, are you comfortable with this? What's your budget? It's not our budget, it's yours. Plus also working within the confines of what we can get done within debt to income ratios, approvable, all that good stuff. So let's see, what factors might contribute to, yeah. And, talking about bad credit score, unsustainable income, I like to call these, what are we solving for? So the main challenges we see with folks on a daily basis, or heavy student loan debt, maybe they had unemployment, they're carrying a debt load and temporarily lower credit scores. Maybe they've had historically bad credit. Maybe there's something in the past, a bankruptcy, a foreclosure, any of these things. The more intricate the problem, the more questions we need to ask to help solve that. And a lot of times people think they don't have any options just because it's a complicated scenario. Things like bad credit score, it really is situational. So based on where that person stands today, what is possible today, what is possible within 30, 60, 90 days, what might be possible at 6 months down the road. So sometimes one credit move, maybe there's one medical collection that could give that borrower 40, 60, 80 points. I've seen that oftentimes. Oftentimes, if somebody has a credit score that needs some work, there's usually more than one thing pushing that credit score down. So depending on the scenario, if they need professional credit guidance, that's where we say, hey, you know what? I don't think it's a great option to move forward because of X, Y, and Z, or, we can't even get you to qualify for these number of reasons, whether it's credit score, it's debt ratio with too much debt, and or not enough income, or we can't verify all their income for a number of reasons. They're self-employed, they're newly self-employed, anything kind of goofy that happened in the past year and a half with COVID and everything like that. So the better we get into the details about these folks' financial position, the better we can help guide them and really look for solutions. Because a lot of times we might have an idea that will work for a previous client in a very similar fashion that we can just offer as kind of a nugget to them and say, hey, this worked for somebody else. I've seen it before. How do we take this approach? So does determining a client's budget in advance make it easier to find a home? Absolutely. We want to make sure they don't overlook for where they're comfortable and or approved for, because one of the easiest things to do is to fall in love with a house above your price point. And that is regardless of what price point it is, whether it's 250 and you're looking at houses at 350, or your cap is 750 and you're looking at houses that are 850. Either one of those scenarios and anything in between, we don't want folks getting outside of their comfort zone and getting them making uncomfortable financial decisions. So the better you can kind of keep it in the fairway of where you want to be at the end of the day, that when the numbers settle down, they're going to be within the range the client's looking for. Yeah, it's one of the biggest things to do is making sure the monthly and the cash to close budget align with what those buyers are looking to do. So most friction, I would say, on the mortgage side comes from loan officers not knowing guidelines, loan officers not knowing their numbers, loan officers not knowing how to walk people through the complicated purchase process and navigate that. And a lot of times it's all three of the above. And if we're good at the numbers, we're good at the process, we know all the mechanics, and we can help guide people through that process, we're not just order takers. We're not just, hey, what's your rate today? And there are large shops out there, the big ones that we all at least over in my world, that gets me up in the morning to compete against these big shops and retail lenders that are just absolutely taking advantage of clients on a daily basis, overcharging them in higher rates and higher fees. I know that's one of the main reasons I am here in the independent channel. Showing you care enough early in the process to get the numbers and the budget right, it just makes such a more smooth process, because by the time the clients are out seeing that first house, or maybe they're seeing their 10th or 20th house, but they're ready to write up that offer, if I've already taken them through a estimate from me up front, they already know what numbers are going to look like from me. So when they see the estimate that day, which is probably on a weeknight or on a weekend, they're going to see that estimate for me, be familiar with it, and go, okay, payment. And there's really not going to be like, whoa, this whole new thing to review. We've already taken that step. I said, when you're going to be out looking at houses, that keep my cell phone handy. We can put that offer together because we've done our homework during the week. So yeah, again, doing my homework, getting my math homework done, making sure I have it ready for my clients when they need me, especially in heavy purchase season, nights and weekends. The more work I do up front during the school week, the less work I have to do on the weekends. We can just turn stuff around super fast. So setting that stage before they get to that offer writing process, we know how emotional that can be. We know how stressful it can be. There's a lot going on. So I tell people this: I want to get your documents up front. I want to get your budget. I want to get everything dialed in up front, because when you find that right house, things move fast, and it could be 21 days, it could be 30 days, 45. They could be selling another house. They have kids, jobs. Life's chaotic, especially when you're buying and selling real estate. So putting ourselves in our shoes, one, to making sure we can get out for the numbers and just deliver on what we say, is such a huge thing. That as an industry overall, most people fail to deliver an average experience, let alone an above average one. So have you been able to build a successful referral business by helping your clients with their budget up front? Yes. Good question. Yeah, I think, I definitely know, taking, it could be 15 or 20 minutes. Is it really that much more time to ask a couple questions about people's budget? We're not getting out an Excel sheet and going through line items. What's their Comcast? What's their cell phone bill? Things like that. But the housing expense, whether it's rent or a mortgage, is everybody's largest expense, period. It doesn't matter what income level you are. Housing is everybody's. It's cost the most of everything we bring home. So we want to make sure we can help people manage that debt effectively, be responsible for it, and just help them have a second set of eyes on it. A lot of people look for us, especially as we get a better reputation in referrals, like, hey, I was referred by X, Y, and Z, and they said you took great care of them. People want to know that they're doing something that is smart and not dumb, and they want to see that the numbers make sense. So we want to show them a break-even period on a refinance where they can recoup their costs. And maybe on a purchase scenario, we look at a slightly higher interest rate to pay for closing costs because funds are a little tight. Maybe they're going non-contingent and aren't going to be able to sell the townhouse until a couple months later after they get the single. There's a lot of different ways to look at it. We're not just slinging loans, and we're helping families move into new homes. And there's a lot of things that go into that, especially from the financing front. So getting involved, caring about the numbers, making sure we establish that budget with the client, it's definitely had a massively positive impact on my business. And it's hard to really tangibly put a number to how has it helped me, but taking a step back, it definitely has had a really positive impact. It's just, referrals are these things that it's just this spider web. It's like getting a crack in your windshield. Sometimes it stays really small, but if that crack gets enough momentum, it really could just spider out in a good way. So I know that being a nerd for the numbers has been a huge help in my business and in my career. This is my 14th year doing this. And for a lot of years, a lot of people said, you're different from other mortgage originators. Well, yeah, I didn't necessarily grow up and think I was going to be in a sales role. Completely not. Nobody grows up and says I want to be a mortgage originator when I'm an adult. I don't think I've heard of anybody yet. So I was not that kid. Like most people, you fall backwards into the industry. And I quickly fell in love with it and started to get some traction after about 2 years in. So here I am, 14 years. P&B has been open for 3.5 years now. It's an awesome time to be in the business. In fact, it's the best time ever to be in the business. Like, what more could we want right now? I won't go down that road. We go on that side tangent, but Yeah, getting geeky with the numbers, getting geeky with the budget, making sure our clients know we care about them and their goals and what they want to do, and helping them stay within what makes them comfortable. It really does go a long way. And it doesn't take that much effort to really care about your clients and show them you want them to make good decisions. So, last question, last but not least question. Do you have any advice for brokers looking to implement a process like this in their business? Yeah, my best advice, a decision I made in 2008 when I started as an originator. I worked for a small broker shop outside of the city here in Philly for 2 years. Then I went to the direct correspondent side for 7, 8 years, and then came back to the wholesale side when we opened up PMB 3.5 years ago. So knowing what happens in the retail world, I ended up moving many companies along the way. Um, Establishing a database from day one with all of your clients that you close loans for, stay in touch with them. It doesn't mean you have to call them up every month and try to sell them something. That's not what we do. We don't really have the volume and the repeat transactions like you would at something that's a monthly subscription service. But at the same time, too, if you genuinely have a relationship with your clients and want to check in and see how they're doing, they're going to welcome your call. You're going to see how the kids are doing. How's the baseball? How's soccer? You're heading down the beach, you're heading up to the Poconos, whatever it might be. Just stay around. Hey, if anything you need, let me know. I want to be the hub of your wheel of real estate world. We know the real estate attorneys, the title companies, the top agents, insurance. You know it. We want to be a resource for our clients moving forward. So when you close a loan for somebody, obviously you want to do a great job. Make sure you're going to get a 5-star review so that when you ask them for business at some time in the future, they're more than happy to go out of their way for you if they're not already thinking of you too. But really just consistently being available, standing in front of people, and letting them know you're available to help them or whoever they know. It's all systems. It's all timing. It's having a database, and just, I don't even use my database anywhere near to the effectiveness it can. It does no outbound emails for my past client database, but it helps me keep organized with closed loan dates, with client birthdays, anniversaries, things like that. So my past clients, several of which who are now employees of PNB, they know about getting birthday cards from me, getting an annual kind of check-in. And again, I do an okay job at it, and it's pretty effective. Imagine if I was really, really good at it. So um, me building a referral-based business, staying in touch with people, not being a salesy, like, I'm not that type of person. When I do videos like this to clients, I speak just like this. I found in the past year and a half, with everything shutting down, this helped me get ahead of the curve. Communicating with clients, because oftentimes everybody tries to get you on the phone in this business and people are busy. They have a lot going on, work, school. If the better we respect people's time, genuinely invest in getting a relationship with our clients, wanting to do right by them so that I sleep at night, they sleep at night, and everybody's happy. I mean, that's ultimately the goal here. There's plenty of people out there that are more concerned about their commission on this loan and all the numbers, when if you just shift some of that focus onto the household and the family who you're working with and helping, it makes a massive shift in your mindset and how you approach the business. So I'm fortunate to say, as a result of having a pretty decent database follow-up for past clients, obviously last year was an awesome year in the business and a gift for many of us. But without that database, without the home bot running in the background, as a result of staying in touch with my clients, it set me up for an incredible year last year. So that just doesn't happen. It was a surprise. It was awesome. But intentionally moving forward, I need to do a better job with all the people I closed last year. So that starts now. Doing things like this. And if you can take the time to be organized, I started with an Excel spreadsheet in 2008. I think I closed 11 loans in 2008. So my spreadsheet was not that large. And when you've got 10, 12 clients to stay in touch with, guess what? That's one a month that you need to stay in touch with. So obviously you want that to snowball. Now our team's fortunate to be closing dozens of loans a month. So things are growing at an awesome rate, but you don't go to that overnight. It starts with doing one loan, then two, then comfortably getting 3 to 5 a month. And you start to get in a groove of what's possible. But all this, back to the numbers, knowing the numbers, letting clients know that you know the numbers better than anybody else they're going to talk to. Because odds are, unless they're getting somebody else from AIME, who's an independent broker or another top originator, we know what the rest of our competition is out there like. So if you trade paint with another awesome broker who knows their stuff, that's great. That means we're doing our job. If two brokers have the opportunity to win a client and it's not a retailer or a bank, I personally consider that a win for the channel and our side of the business. So consider it that way. It's like I'd rather know everybody in my backyard and see them as friends. We're all competing against the big giants out there, and we know who they are. So best advice, stay in touch with your past clients, do an awesome job, make sure you are valuable to them to where they're like, you have to talk to Paul, you have to talk to this person. I'm grateful and humbled enough to have been referred a lot over by 14 years. And yeah, it is, in my opinion, as somebody who is a naturally introverted person who never thought they'd be in a sales role, my long-term goal, and this is not an overnight thing, it took years to get here, but staying in touch with past clients, doing a great job, and just generally being an all-around decent human being go a long way in this business. So it's really all I got for you. Happy to do this for AIME. Thank you for putting this together. Hopefully this gives some value to some folks out there getting started. And here we are 3.5 years after launching a 2-person company as a team of 17 people. And, it is largely a result. I'm trying to do my best to help the team here implement simple strategies, just staying in touch with people so that they can build the same business long term. So had an awesome time. Thank you, AIME. Peace out.